Nolan, very good to see you. We're going to clarify some headlines lately. Basically, after the passage of the big, beautiful bill, Social Security is still going to be taxed. So let's explain what provisional income is, because understanding provisional income is key to understanding how your Social Security will be taxed. And a little bit of planning now can go a long way in saving you thousands later. So, what is provisional income and why is it important?
Thanks, Erin. Provisional income is a very important calculation and number for retirees, and not very many people know what it is before they claim Social Security. So it's good to get into. Provisional income, or combined income, as it's called sometimes, is a combination of a lot of different things. It's half of your Social Security, ordinary income, dividends and interest, and a couple other things that go into that bucket of money. But provisional income is basically the bucket of money that you start filling up that the Social Security and the IRS administrations use to assess how much of your Social Security is taxable.
And I'm glad you brought that up because I think a lot of people don't even realize that Social Security is taxed. So, what percentage can be taxed, and how does this relate to provisional income?
Yeah, I see headlines a lot that say up to 85% of your Social Security income can be taxed if you have a lot of income each year. And that's pretty much the cap that they can do on it. It'll never be 100% of your benefit, but it can be up to 85% of your benefit income. So what happens is you're filling up this provisional income bucket or this bucket of money with all these different calculations, one half of your Social Security, ordinary income, these other things. And once your provisional income gets above those thresholds, that's when you have taxable Social Security. If you have provisional income, $50,000, $60,000, $70,000, most of your Social Security becomes taxable at that point.
Yeah, it's to me surprising how low that threshold is. And you've touched on this, but let's drill into it. What makes up your provisional income?
Yeah, one half of your Social Security and ordinary income, as I mentioned before, are the two biggest ones, but we've listed here basically the rest. So it's all of your earned income. So if you have 1099s from contract employment or things like that once you're retired, 1099s from the bank, dividends and interest from your bank accounts. IRAs, 401k distributions, required minimum distributions, pension income, interest from municipal bonds, which that's probably the most interesting piece. I mean, that's traditionally completely tax-free income, but it's still included in your provisional income calculation. And then just a couple more things that were listed on the bottom there. But it's basically everything that's compiled into this bucket. And once you start filling that bucket up, they will start taxing your Social Security.
And your greatest tax liability are those distributions from your IRAs and 401ks. But explain how distributions from your Roth accounts don't affect your provisional income.
Yeah, on that slide that we had before, we did list all of the different things that go into your provisional income. And one thing that we did not list was Roth IRA distributions. Another thing we didn't list was life insurance distributions if you have cash value in your life insurance policies. So there are exceptions to a couple things that allow you maybe some flexibility with provisional income, but most retirees, most of your money is going to be included in that provisional income calculation unless you have a good bit of income coming from Roth IRAs.
And again, just to circle back to the top and clarify, after the passage of the big, beautiful bill, your Social Security is still taxed, but what's different?
Yeah, the main thing, they were trying to eliminate Social Security taxation for everybody, but that's a pretty big sweeping bill for a big tax revenue that the IRS gets. So instead, we all get, over the age of 65, we all get a higher standard deduction as long as our income is under a certain threshold. So if you have any questions about what those thresholds might be, or you want to know, hey, I want to do Roth conversions, but I also want to take advantage of these additional deductions, we can start running those calculations for everybody over the next couple of months and clear it up before the end of 2025.
Absolutely. Proactive planning is key. Claiming Social Security, when to claim, something you specialize in, Nolan. So if somebody would like to sit down with you, how can they get a hold of you?
So calling at 616-301-2581 is probably the best option, or at our website, you can fill out the contact us box at the bottom. It's cornerstone-rp.com, and we'll usually reply within a couple hours.
Great. Nolan, thank you.
Thanks, Erin.